The first thing I want to say, which before I come on to gold, is what Jamie Dimon said. You quoted just the first part of what he said.
Yeah.
But actually what he did was he went on to say that JP Morgan will be very cautious in its policies. So what we have is the most senior American commercial banker effectively warning us that there is going to be no further growth in bank credit, possibly even contraction in bank credit. Now, this is the, if you like, the nightmare of central bankers who, ever since Irving Fisher described the relationship between bank collateral and bank credit in a bear market, they don't want to see this happen at all. So this warning, I think we have to assume that it's going to be followed through. You're going to find contracting bank credit. You will therefore find that there will be a soft peddling of the new policies about tightening on interest rates, tightening on QT and all that sort of stuff. I think that might be amended a little bit. They're still talking about transient inflation, but I don't know if you've noticed this, but the American Fed sort of backed off that statement when it was absolutely ridiculed. But actually, what they're still now saying is it's still going to come back to 2%. It's just going to take a little bit longer. So this is interesting. So the first thing I would say is that Jamie Dimon's statement about the future lending policy, I think, was probably the most important part of that. The American commercial banking world is now battening down the hatches. And that is something that we've got to take into account going forward from here. Now, with respect to gold, the value of gold, the fact of the matter is that after, 50 years from 1971, 51 years, from 1971 to date, the Keynesians have basically ruled the roost when it comes to talking about money. They don't understand money. They don't know what money legally is. And so consequently, the level of exposure to gold is extremely low. And people just don't understand what gold really is. And that, if you like, is a situation which has been exploited by the bullion banks, who understand that only one thing, and that is that gold has no counterparty risk, and therefore it is a superior asset for collateral purposes. And it allows them to wheel and deal in paper gold on the back of that. And they are always on the short side. They have now been caught on the hop somewhat and are trying desperately to retrieve their shorts. And what that involves is sending signals out to the market that gold is going lower. Don't buy any gold. Forget gold. Sell your gold to us. We will take it for you. Paper gold, And this is really what's going on with gold at the moment. But if you go back to Roman law, it was clearly stated at the time that money was metallic, and it was the only thing that qualifies as money. Everything else is currency or credit. And this is, written in Roman law and has been adopted. It continued throughout the continent. Now, in Britain, the Romans left before Justinian codified all this. So we didn't actually have this in our common law. But in 1875, when they put together the courts of chancery and common law, at that stage, the practice of understanding that true money was gold, coin, and nothing else, that then became law in Britain. And given Britain's empire in the second half of that century, it effectively became the standard not just for Europe, but for the whole world as well. So that's where we are. I mean, we're talking about legal money, which the Keynesians are trying to deny, but they're trying to deny the law, which is nonsense. And it must be a source of great embarrassment to the Keynesians that central banks, which are notionally in their ideological camp, retain gold reserves and are extremely reluctant to make them available to their own populations through the currency, which you would have thought, if people are stupid enough to want this pet rock, then we'll let them exchange money for it. No, they don't. Why? And they certainly are very reluctant to offer gold as a means of exchange, if you like, to other central banks for other currencies. So, where are the Keynesians? I think they speak with forked tongue on this. And this is part of the whole corruption, if you like, of the fiat money system that is now coming to some sort of halt. And what that halt is, I'm sure will come out in the course of this conversation.
Mm-hmm. So what's going to be the catalyst, really?
Well, it's interesting. We have at the moment a debate developing between, is it inflation or are we going for a recession? As far as the Keynesians are concerned, it's a black and white. You're either, if you've got a recession, then in prospect, then you've got to just stimulate the economy. So, but they've just given up all understanding of the role of money in the economy. The monetarists claim that they know what's going on with money, hence the term monetarism. But they work effectively off a mathematical formula called the equation of exchange, which involves the quantity of money, the velocity of its circulation, the prices, and the number of transactions, which are broadly, if you like, summed up in GDP. But this actually has got nothing to do with the reality of the situation. The value of currency doesn't work off a mathematical formula. It actually works off how people see it and how they want to use it. And in that context, it's interesting to note that the level of personal liquidity, all the vibes I get, the level of personal liquidity and liquidity in business balance sheets and in the financial sector is large. It is higher probably than it has ever been. I'm talking about the money which one holds into reserve to spend at a later date. And the level is uncomfortable. And consequently, we're beginning to see people trying to get rid of it. I mean, the first sign of this was when we came out of lockdowns, when people had been unable to spend. What do? They started chasing prices of secondhand cars up through the roof, and they're still above the price of new vehicles. I mean, it's just crazy. What you have is a developing situation of people trying to dump money for goods. Now, this back in 1923 was termed the crack-up boom. Basically, the only benefit to the economy of this collapsing currency was that everybody wanted to get rid of it, so they rushed out to buy what they could, while they could, and that's the crack-up boom. And it's the point where people begin to understand that actually this money is never going to recover. I mean, the idea that the paper mark in those days might recover was the sort of firm belief in the foreign exchanges from time to time, and also from the people. And the people in Germany really they finally gave up hope in around about April to May 1923. And at that stage, they threw in the towel on the paper mark. And the paper mark rapidly descended into complete worthlessness. We have a slightly different situation today because we're starting from a point where everybody has got this liquidity up to their necks. I'm talking about currency, but mainly bank deposits. If you look at the total of bank deposits as measured by M2 in America, it's $21 trillion. That is against a GDP of around about 21, 22 trillion dollars. I mean, it's almost one for one. This is crazy, absolutely crazy. And it's the reason why the Fed has outstanding reverse repos of around about $2 trillion, which is roughly 9% of that total of 21 trillion. Why do they have this? They have this. The point about a reverse repo is it takes in unwanted currency from circulation. In other words, people don't want $2 trillion, and that amount is likely to start building if you find that interest rates continue to rise. Why? Because you're getting paid sweet FA on your deposit account. Why should you hold dollars on a bank deposit account when you're getting paid almost nothing for it and prices are rising at a 9% clip? Why should you hold on to dollars when we already see that the Fed's balance sheet is in negative equity? They have just declared that they have got losses, unrealized losses on all their QE acquired bonds of $380 billion. I looked at the balance sheet yesterday, and the total equity, including undistributed income to the US Treasury, stands at 50 billion. So, 380 wipes out 50. Now, they do have a gold note on their balance sheet, which if they revalue to the current level, which they would need the permission from the US Treasury to do, and I don't know the exact terms of that gold note, that would restore the balance sheet. But if you get a further fall in bond prices, that would get wiped out very, very quickly. So, why should we be holding on to the highest level of deposit liquidity that we've ever seen? This is a dangerous situation. And then you've got, America is one thing, but and the banks there aren't horrendously overgeared. They're sort of like 11 times asset to equity. But go to Japan, over 20 times. Go to the Eurozone, over 20 times. And if you look at the share prices of the Eurozone banks, the global systemically important banks, they're all standing at huge rate discounts to their balance sheet equity value. So in other words, they're under book value. Why are they under book value? It's not because they're a good bargain. It's because people understand there is huge risk in these banks. So why, as a depositor, should you be holding deposits? Well, if you're a small depositor, you're probably relying on the government to underwrite the deposits. In the case of the Eurozone, I think something like 100,000 euros or something like that. Here we've got £85,000. So, if the bank goes belly up, then, we get bailed out by the government. But if you're a large depositor, do you really want this situation? Do you really want to have this risk? If, let's say, you've sold your house and you have got your money in your client's, your solicitor's client account, that's not covered. That goes, bang! You lost the proceeds of your house. This is a situation which is rapidly deteriorating, and it is deteriorating the more we see pressure for interest rates to rise. And what the central banks are trying to do is they're trying to convince us that this inflation thing is temporary and we're going to return back to 2%. Therefore, we don't need to put up interest rates other than just by a tiny bit. This is, I can tell you, a very dangerous situation. It is rapidly descending into something which we may have seen the beginning of, and that is a crack-up boom. And that crack-up boom basically means that the value of the currencies just evaporates. There's no other word for it. We've been talking about this. I've mentioned the John Law experience back in France. When you get a situation where the central bank decides that it's got to support the assets, the financial assets in the system, which basically will be the policy of the Fed as it tries to not raise interest rates, then you kill the currency. And that's really the prospect of what we see.
What we're saying is when all else fails, everyone rushes to gold. That's really what...
They've got to re-educate themselves, Daryl, because we've forgotten what true money is. I mean, I've told you the legal situation, but nobody understands that really, except lawyers who specialize in banking. But this is not in general circulation, and economists, they say, oh, it's a pet rock. It's not. It is legally money. Not, currency isn't even legally money. So it's a substitute for money. And this is the amount of re-education that everybody's got to go through very, very quickly. I think is going to take gold from where it is to a far higher level, not because gold is going up, but because currency is collapsing. And that's the key to understanding what's actually going on. This is not an inflation thing, which, because the Russians are screwing up the food supply, the world food supplies and all the rest of it, it means that prices are going to rise. No, forget it. It's not to do with that at all. It's to do with the purchasing power of currencies collapsing. That is actually what we're talking about. And to actually deem it as inflation is in that sense very much a misnomer and misleading. And I think this is a very important point which people have got to understand.
It's scary. It's an absolute lack of education, isn't it, really?
Absolutely.
Lack of understanding.
Everybody does 10 years or 12 years of education, and then they go on to university, but they're all taught on the same wave level. The economists of John Maynard Keynes. And it's a complete failure. Yeah. Alasdair, we'll move on. Wow. We did mention about Russia. That will be a second question I bring up. But before I do that, I want to talk a little bit about cryptocurrencies. I'm going to let the audience know that I don't own any, right? Never have and never will, all right? And because I have a belief that it is a fiat currency anyway. It has come from nothing. There's no backing of it. It's just a thought-up idea. But I want your comments. I'd like to know more about cryptocurrencies, Alasdair. Bitcoin, at the highest peak, from what I can see, it was around about $70,000 for a coin, now falling to around $29,000 to $30,000. Well, that is over half, over 50%, and there's no way that appeals to me. All right? But this appears to be, to me, unstable. Now, could government intervene and make cryptocurrencies unlawful? For example, introduce Roman law. What's your feeling?
I mean, your mention of Roman law, I think, is actually the underlying point. Let me explain it just a little bit more. Money and currency, in other words, money substitutes, have a different position in criminal law than other property. And what this means is that if, let us say, someone steals a possession from me, and I happen to find out where it has gone, even though it might have passed through a number of hands, if I can establish that that was my property, then I can reclaim that. And there is no compensation involved, even though the person who last acquired it, who I have identified now thinks he possesses it, did so in good faith. It still remains my property. And indeed, this is the background to what's been going on ever since the Second World War, with Jewish families recovering their art, paintings, whatever their possessions, which were taken off them by the Nazis. So it's very important to understand that money has a specific legal status in criminal law, whereby if stolen money or currency changes hands and it ends up in the hands of someone who was not involved with the theft of that property, currency, gold, whatever it might be, and received it in good faith, it cannot be reclaimed by the original owner. It cannot be reclaimed. Now, so where does this leave cryptocurrencies? Cryptocurrencies can be reclaimed because they have exactly the same legal status as a work of art, as anything which is not money. So that can be reclaimed. Now, you could say that, well, good luck to the government establishing that your Bitcoin, at an earlier stage in its existence, were the proceeds of crime. I agree. It could be very difficult for the government to establish it, but it's not going to necessarily stop them trying, and it disqualifies cryptocurrencies as acting as currency. Of that, it is absolutely clear. The governments, with their lawyers, will be advised of this basic law, which exists in English law, exists around the world, had its origin in Roman law, and they will frame their regulations. They will look at the future of the cryptocurrencies and as to whether they want to get involved, very much on that basis. Now, there is a sub-story in this, and that is that you have got the technology, which is extremely interesting to governments. That is certainly true. Blockchain technology and so on and so forth. And they are talking, I think it's almost a defensive move in a sense. They're talking about introducing their own central bank digital currencies as some sort of way of satisfying the demand for a cryptocurrency. And it's turned into a sort of control freakery thing whereby, this is actually quite a good idea because we can use a central bank digital currency to target, sort of various industries to, sort of make sure that our stimulus works. And we can also cut people out if they think they're wrong and they won't get the digital currency. So you've got all this sort of stuff, and it's the exchange of information. The information that will be given to central banks is absolutely massive. They will be able to pry into our transactions in a way we have never seen before. But anyway, putting that to one side, I think when it comes to the cryptocurrencies, the way they have performed is that they have fallen along with the high-tech companies. They've tracked them almost, this year completely. I saw charts on Twitter of 3 or 4 of the major sort of what they call FANGs, sort of the Google, or is it Alphabet, and so on and so forth. Yeah. And it's absolutely in line with what's been going on in Bitcoin, Ethereum, and so on. If we get a situation where they go down much further, then I think governments are going to be tempted to blow the whistle on cryptocurrencies. They couldn't do that at the top of the market because that would be too contentious. But we're rapidly getting into a situation where governments can start claiming that they need to intervene to stop their citizens being sucked into something where they're going to be losing huge amounts of money. They need to protect their citizens. This is the sort of thing politicians talk about. So I can imagine them doing it on this one. I have traded Bitcoin in the past, and I'm glad to say very successfully. I got out far too early, but that's the nature of things. I'm glad I don't have them now. I've learned a lot. And I think also that the stable coins upon which these which is the basis in which these things have traded, they also impart an extra risk as well. If you look at the assets backing Tether, there are some cryptocurrencies in there, I think less than 10%, but also the backing very much is commercial and US Treasury bonds, which in an environment of rising interest rates means that their values fall. So, that's no longer, the buck there basically will be broken. And I think this is something which is a potential scandal. They have refused to actually say what the backing is, only just give a sort of broad brush statement. Their figures are not audited. They refuse to audit them. I would have thought the easiest way to dispel any criticism is to audit, say, right, okay, we call Pete Marwick or KPMG in, they've looked at all the assets, and this is what they say, and that's what we've got. And that's our liabilities. It's easy to do. So you have to ask yourself the question, why don't they do it? And I leave that one hanging in the air.